Welcome back to Yahoo Finance Live. I'm Jennifer Schonberger. The Consumer Financial Protection Bureau released a long-awaited proposal today to rein in overdraft fees banks charge when a customer overdraws their account. The rule would cap fees anywhere between $3 to $14 compared with $35 on average now. For more on this, I want to welcome into the program CFPB Director Rohit Chopra. Director Chopra, thanks so much for joining me. It's great to see you.
Great to be with you.
You proposed capping overdraft fees for banks with $10 billion in assets or more in the range of $3 to $14 compared with $35 on average currently. How do you expect that this new rule could impact overdraft protection for consumers? And how much could consumers save on this rule?
Well, what we've seen when it comes to overdraft in recent years is a lot of abuse. It used to be a real convenience back in the day when you mailed a check and it took a few days to get there. But over time, as debit cards became ubiquitous, these overdraft fees turned into a billion-dollar bonanza. We have caught so many large banks engaged in illegal overdraft abuses. So what we're doing is we're looking to close a longstanding loophole that allows large banks to sidestep the consumer protections that are available with other loans like credit cards. Banks will still be able to make money, but they'll need to be upfront with it and they'll need to be fair. We do anticipate that this will save the average family that experiences overdraft around $150 a year. I think at the end of the day, this is going to make the market more competitive, more fair, and really in the best interest of everyone.
To your point, Director Chopra, banks stand to lose billions of dollars on this. Do you worry that banks will try to make up for that lost revenue by trying to charge higher fees to consumers for other banking products or try to dial back availability of banking products like overdraft protection?
Well, trust me, banks will always look to find profits everywhere they can. But here's what we found when it comes to reining in abuses. Back in the day when there were new credit card reforms, we did not see a massive reduction in availability or any of the other predictions that the bank lobby put out there. We think what we've done is quite reasonable today. We're going to be collecting public input before finalizing it. We still think that there will be plenty of availability of credit and that people will be empowered to manage their overdraft loans more effectively.
Director Chopra, what other fees can we expect the CFPB to propose going forward?
Well, we've looked hard at a number of places where financial firms are seeking to build a business model when their customers fail. So we've looked at certain credit card penalty fees. We've looked at non-sufficient funds fees, where we even caught Bank of America double dipping and charging multiple fees per incident. We also have been looking at all sorts of other customer service junk fees and have made it clear that there are certain places where it's just illegal to charge them. We even found a paper statement fee where the bank didn't even print it out or mail it. The results, I think, will ultimately be billions of dollars back in consumers' pockets.
Switching gears, the comment period for the Basel III proposed capital requirements ended yesterday. We've already heard from two Fed officials who have proposed major revisions to the rule in line from what we are seeing from comments that have come in already. What is your impression on what revisions could be made and what could you support?
Well, we're going to look at all of the input we're receiving, but here's a real core piece. A lot of the biggest financial firms, sure, they don't want to hold more capital, but guess what? The public doesn't want to bail them out anymore. We have seen some blockbuster quarterly earnings results, big numbers from JP Morgan Chase, Goldman. Many of them will be able to shore up their capital position using their earnings, using some of the existing assets that they have. So we're going to look, but I have to tell you, I don't want to be in a world where we keep bailing out the largest financial institutions on the planet. When they take risks, it should be their shareholders and executives who lose, not the public who bears risk of a financial crisis.
And speaking of comment periods ending, last week the comment period ended for a rule that you, the CFPB, proposed to regulate big tech payment systems like Apple Pay and Venmo, the same as the nation's largest banks. My question to you there is, big tech has said that this has gone too far. They'd like to see the rule reproposed. Are you considering making any changes to that rule? And when could we see a final rule on this?
Well, we're going to look at every piece of input we receive, but I guess what I'm wondering is the rule we've proposed doesn't put any new substantive regulation or obligations. It just allows us to take a closer look at their operations. If big tech companies are following the law, they should have nothing to fear about it. The reality is that there are now billions of dollars in payments being trafficked on Apple Pay, Venmo, so many other digital payment apps. They need to grow their business fairly and not use regulatory arbitrage. So, Jennifer, I really want to make sure that consumers, they have their protections under federal law are being honored regardless if they're working through a bank or through a big tech company.
Well, we'll have to leave the conversation there. Director Chopra, thank you so much, as always, for your insight. So appreciate it. Hope to see you soon.
Great to see you, Jennifer.